Good morning, everybody, and this is your Dow Jones day trade setup for today. So I always love it when my views play out, and it's exactly what happened yesterday. We rejected the top of the wedge and basically came back down. We still don't have the structure, any structure I'm looking for here at the moment to be chasing any trades to the upside. What we do have though is fairly well-defined diversions that's in the oscillators at the moment, and we have a wedge pattern with diversions. That's always an indication that we should be paying very close attention to a potential break to the upside. But the narrative stays the same. The levels that we need to break from yesterday are still in play, and the major level of support zone is to the downside here. So let's just get down to the levels we want to be trading today. And if we get down to the 3 hour, you'll see strong move up, rejection of the top of the wedge, and we can now just fine tune that wedge to there. So clear rejection of it and rejection of the 155 EMA crossover of the moving averages here, of the oscillators. So I would expect us more than likely to continue come and visit 35,500 at least at the moment. So a bit of a meltdown was just because Jerome Powell was reappointed as the Fed chair. So now the market is concerned that they're actually going to start tapering off their investments. But yeah, I'm not going to say much more than that. But anyway, it's just the emotions of the markets as such. But it's always the algorithms. It's not really the level-headed traders that are making these decisions. It's algorithms that are trading the noise and the news, looking for a quick gain. Anyway, move down the hour. You can see been pretty volatile, big down, big ups, big confusion. This is still the level that we need to pay attention to, 35,947. Ultimately, 3,600 is the area we need to clear. And if we look at what's going on at the bottom here, oscillator starting to group to the downside off a level. So still a little bit concerned about this level to the downside of 35,500. So for all intents and purposes, we are sideways. I'm not really keen on shorting this market, and I'm not keen on getting long just yet. So I'll be waiting. I think I'll be waiting a little bit longer. There is structure at 35,500, which is very strong. So that's possibly an area that I'd be looking to just nibble and get in for a relatively a small position for a trade to the upside, because my stop is going to be below 35,160 area. That's going to be the stop area. So that's a 345 point stop loss, which is fairly large. And I'll be looking for a 400 odd point gain to visit the top of what I'm assuming is going to be the range. So that's kind of my view at the moment. I just want to pop down to the 15-minute just to give you a bit. You can see here's where the noise came in here. So we had a fairly good structure. If you look here, this is the level I gave to you yesterday, and it was the previous close. So normally that gets tested on a Monday anyway. And you can see the inside bar and a pin bar off a level. Fairly decent trade for an opportunity. On a break of that, you're long, stop right below that pin bar, and you would have had a very good risk to reward if you look at it. So there's your entry, stop around there, 45 point stop loss to the top of the wedge, and that was 250 points. So what's that? 1 to 5 risk to reward. So you're risking 1 and you're gaining 5. Those are the kind of trades that you're looking for. Anyway, that was the view that we had yesterday, and it was pretty much up and down. So I would be a little bit cautious today. Just wait and see what the market's going to do. But I suspect we're more than likely going to visit this area here. And I'd be interested in a small nibble at 35,500 with a relatively large stop loss. And first target is going to be the wedge. Second target is going to be this level here. Clear break of 35,947 at the moment is an indication that we have a wedge break and we're looking for a move to the upside. Okay. Anyway, that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.